Hi, I am Sujay Chaudhari, SEBI registered equity research analyst, and in this video I will talk about wealth creation through long-term investing in equities. I will also give you some insights about our investment methodology, and I am sure it will help you in your investment process as well. When we talk about investing in equities, be it from long-term or short-term perspective, clarity of thought is very important. It allows us to do our investment without any confusion, and it also allows us to stay focused on the investment's objectives. Accordingly, we have a well-defined two-stage approach when it comes to investing in equities from long-term perspective. In the first stage, we define investment rationale, and in the second stage, we define risk management process. Let's focus on the first part, that is defining investment rationale. You must have heard about stories where investors invested in equities for a long period of time and managed to get above average or extraordinary returns on their investments. On the other hand, you must have heard about stories where investors invested in equities for a long period of time but still could not get any return on their investments, and in some cases they even lost their money. If you do careful analysis of the companies who managed to give above average or extraordinary returns to the investors, these were the companies whose financial performance was improving over the period. These companies were growing in terms of their sales and profitability. Eventually, market recognized the value and rewarded the investors who remained invested in these companies. On the other hand, where investors could not get any return on their investments were the companies whose financial performance could not grow over the period, and in some cases these companies were incurring losses as well. Sticking to the same logic, we always try to invest in companies where we see good financial performance and where we have growth visibility for the coming few years at least. Having said this, business environment is volatile, and this volatile business environment is very much capable of giving us positive as well as negative surprises. To mitigate the impact of these negative surprises, we need to have a well-defined risk management process in place. That is where the second part of our long-term investment approach comes in. Let's focus on the second part of our long-term investment approach, that is risk management process. We manage our risk through effective diversification and through well-defined exit strategy. So let's focus on the first part of our risk management process, that is effective diversification. We like to create a well-diversified portfolio where we have diversified across 35 to 40 companies, and these companies come from multiple sectors. As a part of our diversification strategy, we invest in large, mid as well as small cap companies where we give very little weightage to small cap companies. Diversification across 35 to 40 companies allows us to mitigate any negative impact on the portfolio on account of any individual company. The second part of our risk management process is well-defined exit strategy. There are certain instances where we may choose to exit a particular investment idea. First such instance is where we see overvaluation building up. It is our experience that whenever a company is trading at very high valuations, eventually it starts correcting and consolidating, and this process goes on for multiple years where we end up wasting a lot of time. In such cases, we choose to exit that particular investment idea and move on to some other company. The second instance where we may choose to exit a particular investment idea is where we see growth slowing down and we are convinced that in the coming years company will not be able to grow as per our expectation. In such cases, we will exit that particular investment idea and move on to some other idea where we have some growth visibility. The third instance where we will choose to exit a particular investment idea is where we see some important corporate governance related lapses on the part of management. We always try to invest in clean companies where management is transparent and maintaining positive communication with the investors. So this is how we have devised our long-term investment approach. I hope it will help you in creating your own long-term investment thought process as well. Thanks for watching this video.